and the wife of the president, you need a large staff. But it would seem to me that we have, following Mr. Bush, and I wasn't a great admirer of Mr. Bush, we have now a president in the White House who seems to know everything and intervenes and takes decisions in so many different fields. Now, I happen to just take decisions in one field, economics, and I even don't have the time to read everything that is happening in economics and in financial markets and in other asset markets, such as, say, commodities, real estate, bonds, and so forth. So how would someone like Mr. Obama have the time to read everything that is relevant to taking the decisions he's taking?
Now, Mark, as we close, any final thoughts on anything?
Well, basically, we had a big rally between March and the beginning of August in equity prices. And it's interesting, if you look at how asset markets moved, 2002 to 2007, everything goes up, but the dollar is down. 2008, everything is down and the dollar is up. And then since early March, everything is up again, but the dollar is down. And so my view is that after this strong rally in equity prices that we had, we are due for some kind of a resting period, a correction. And during this correction time, maybe bonds and the dollar could rally somewhat, maybe for a month, maybe for 3 months. And that if equity prices go down below, say, 900 or approach 800 on the S&P 500, we'll have stimulus package number 2, more deficits and more money printing. In other words, the weaker the economy becomes, the more money printing you'll have, and therefore we may not revisit the lows of March at 666 on the S&P 500 on March 6th, but rather have an economy that in real terms does badly, but where stock prices go up for the simple reason that money is being printed, and for the reason that the government, with its zero interest rate policy, wants to force people to speculate. Because obviously when interest rates are zero, and when you have an inflationary bias, to hold cash is in the long run not a desirable proposition, nor is it desirable to own government bonds. So let's say you don't want to own cash in the long run, you don't want to own government bonds in the long run. What else is there? Real estate, stocks, and say commodities. Now, for most people to invest in commodities is not so easy, whereby most people could buy physical gold, but ideally they should keep it outside the U.S. Then a lot of money flows obviously into equities, which is the ultimate investment destination of most financial institutions.
As we close, Mark, can you tell our listeners how they can follow your work?
Well, I have a website called www.bloomboomdoom.com. bloomboomdoom.com.
Okay, Mark, thanks so much for your time today. We really appreciate it.
It's my pleasure. Thank you. Bye-bye.